Good evening, everybody. This is Mike Angelo, Nimble Capital Group. Excited to talk about this downtown revival investment opportunity. Before we dive in, please make sure you read the disclosures. Our securities attorneys and CPAs require us to post this disclaimer and disclosure. This is a 506B securities offering, so we must have a pre-existing relationship with you in order for you to invest. Let's dive in. This project is a 13,000 square foot main building, another 8,000 square foot warehouse. We are completely redeveloping the project. Here's some general renderings that we have of the project here. Our goal is to create a entertainment hub in downtown Casa Grande. And I'll go through why Casa Grande and all those pieces here, but I wanted to kind of get you guys excited first to talk about where things are today, how they're progressing, and what our vision really is. And so this main building that you guys see here, we're looking at 4 suites to be able to create a, again, entertainment hub. We have a restaurant cocktail bar in the works already. That's in the back here, this bottom left corner. The front picture here in the top left that you see, that is a quick serve restaurant. We are working on attracting some tenants for that, but we're going to build out the patio and space in order for it to be vanilla shell ready. The back patio is going to be developed into a common space. We'll talk a little bit about that. And then we have some frontal suites that are going to be traditional retail salon suites type of tenants. It's going to be a great mixed use project. Here's kind of a high overview of the building. So if you're looking here, this is the existing building in its current shape. And what we're doing is remodeling the front, and we're creating, again, a vanilla shell. So the building today is completely empty. We've gutted it all out, and you guys will see some progress photos today. But we're creating this suite. This is called Suite 3. So Suite 1, Suite 2, and Suite 3. And then this is the back corner is Suite 4. So 4 suites within the main building. And then this is the warehouse area that I've talked about. And so we'll talk through what our vision of all of this is. And it's really important to paint the picture of why we're taking on a project like this. The city of Casa Grande came to us actually looking for developers to create this type of an environment. This product does not exist in the city today. If you are familiar with Arizona or any really major city in Phoenix or across the country, you're seeing a lot of revival and redevelopment of the downtown spaces. And that's because people want to congregate, people want to bring families. We have a very large, aging demographic in their 60s, the baby boomers, but we also have large millennials. There are lots of families, and so we have a diverse population, specifically in the Southeast Valley of Phoenix. Again, this is about 45 minutes south of Phoenix Metro proper, and it's primarily been a bedroom community, suburban hub, but with a ton of economic activity. It's really changed the demographic. And so the population has now shifted significantly demographic wise to young 20 and 30-year-olds looking for somewhere to go, have a great time. We also have a great place to raise families. So you have young families looking for places to go and eat and dine out and really hang out. So this common area does not exist, and that's what we're going to create. But again, it looks like a traditional strip mall on this front side, but the back is what we'll talk about here in a second. But these are our current renderings. We actually have all of this completed. The awnings are going in next week. And so now we're working on this side of the building. We're actually having to cut holes out into the masonry and create larger openings. You're going to see some roll-up doors, but very, very exciting project. This is a top overview of the parking area, which I'm going to scroll back up here. You see a little bit of preview here, but this back area is currently a parking lot. And we're making that into a common space. You do see a train caboose, and there's a history of trains in this project or the rail system. One of the reasons we're calling it the terminal, and I'll dive into that a little bit more. But as we look down, that's the caboose. So again, top view down. This is the back patio of Pour Therapy. That's our cocktail bar tenant. We are working on a brewery tenant at the moment. This will be their patio. And then this will give you access to the backside of Suite 2. So we really want to create another congregated space, public open space for families to play, hang out, possibly waiting for a table, passing some time. We'll have some entertainment space. We're really looking at live music as a entertainment venue. So the city of Casa Grande is looking for a venue to have indoor and outdoor music. So we're looking for the outdoors during spring and winter. Of course, summertime, we're going to have to go indoors and protect ourselves from the sun. So that's really the outside here, but this is a high overview of the building, satellite view here. So this is the main building, 13,000 square feet. And then you have the warehouse here, 7,500. So again, our primary business has been in multifamily. the mayor of Casa Grande, Mayor Craig, came to us and said, "Hey, we really feel like this would be a great opportunity. Is this a project you'd be interested in?" We found and talked with the owners of that building. We procured the building at a very, very low basis, almost 60% off of what they were originally asking. We got seller financing on it on the current balance, and so we really went to town with our equity to start construction. I'm going to show you guys some pictures here and get this vision to be created into some sort of reality. So it's taken us some time. It's been a year and a half now since we've been working on this project. Nothing moves fast in construction or development. And we have great contractors. We have a great broker that's sourced some of these tenants for us. But let's look at the way the main building is broken up here. That's this area here. So you have the 4 suites, 1, 2, 3, and 4, and then 5 and 6 is the back warehouse building, and then this is the parking lot space. So again, total of about 19,000 square feet. We're promoting this. This is right off of our broker's flyer. And so we're using a retail broker that's familiar with this type of tenant base, marking it out there with other brokers that are also in retail. The retail industry in general, just like in multifamily, has ebbs and flows, but in areas where you can niche in and find opportunities where there's a lack of product. That's what we have here, is a very huge lack of product in higher end food experiences and dining experiences and really entertainment experiences. This market does not have that, and the demographic is demanding it. And what we've surveyed and heard from not only city council, but even just the population, is that folks have to leave town. They have to go 30, 45 minutes to an hour to have a great place to eat. And so we really feel like this is going to be a home run once we get the project built out and get some tenants signed up. So we already have 2 leases signed. We're working on a 3rd LOI. That means a letter of intent. So we're working on this suite 1 here and some general interest here. And then the brewery is also in the works. So we have lots of traffic around the construction, but we do need to make the shell space ready to go. So let's take a look at that. So this is actually just from this week, current construction phase here. I'll start with the top left. That's suite 4. That's our cocktail bar restaurant. Down below here, this is suite 3. This is going to be the front wall of a patio that's going to be enclosed. So we actually created a patio space by shrinking the inside of the building. And so you'll have some outdoor-indoor space, essentially, but it'll be open to the outside, but covered. So we have some elements there because we're right up against the sidewalk. This is suite 2, kind of a L-shaped space. This is the other view from suite 3 looking out. So this is actually going to be the outside. And then you have a wall being created. So you're going to have glass doors here. So this will be the entry door to suite 3. And this is actually suite 1. This suite is ready to go today. The only thing missing is the air conditioning systems, which we're moving from one end to the building to the other. But it's completely drywall finished. That's a restroom there. So that's ready to go for your traditional retail type tenant. We have an LOI pending from a health industry tenant, and that's as much as I can say because we're under confidential agreement at the moment, but it is in the works. So excited to get obviously tenants in the building. This is from the outside, so this is right on the main Florence Street. So you're looking at suite 1 and suite 2 here. So all the glass is in. This wood siding is going to get wrapped in a composite wood plank look. It's going to look fantastic, very modern look. And then the canopies are already on site. We're just needing to get those installed. So you have 1, 2, 3 canopies. This is the other side where you have the patio. So this was the exterior of the building. Columns are going to come down, and so we'll have a nice little fence here and a patio area with the glass on the inside. So that'll be a great place for a breakfast place or quick serve dining. Phenomenal corner location right on the main drive there. So again, really excited to see construction happening, and this is part of our strategy, is to build a shell and create a vision for not only you, our investors, but also for our lender and also for potential tenants. So they know that this isn't some old building that we're just going to get them to sign a lease for and then not renovate. So we're spending a ton of capital. We'll talk about what our spend is to date and what we're looking to do in the future. All right, so let's talk about investor highlights. So as an investor, we have, this is our basic high-level metric. So we're looking to target $50,000 for a minimum investment. It's a 60-40 split, and we're targeting a 7-year hold. And I'll talk a little bit about this hold. Sounds like a long time, but really our goal is to return your capital very quickly and just stay in the deal. And we chose 7 years as a long-term pipeline. If we have a great opportunity to sell, we're definitely going to sell prior to. What does that mean for you? Really an overall IRR of 16 to 17%. Very, very healthy, very attractive, on par, if not ahead of most other deals that are out there today. Equity multiple, and then your cash on cash. I'll talk a little bit about this 12% cash on cash sounds really good, and it is, and you'll see why it is and how it's displayed here. So let's look at this investor example. So using $100,000, because math is easier when you're using hundreds, what you would do is you would invest this year in year 0. Year 1, which will be next a full year from today, we will be refinancing, completing our construction loan and moving into a perm loan. That permanent loan has a cash out refi function. It's already been approved and calculated with our lender. And so we expect to extract 80% of our total capital raise and be able to give that back to the investor. So if you invest 100,000, you would expect around 81,000 back. That is your principal, which would then immediately lower your base. So your base of investment is now under $20,000. And then the cash flow starts. So minimal cash flow projected in year 1, because we may only have one tenant moved in. Year 2, 3, 4, and 5, you could see on your original 100,000, it's around 5%. We're actually going to be closer to 6 or 7. I intentionally projected a 5%, very low cash flow, intentionally conservative, just to give everybody a good flavor and expectations that we hope to exceed. So 80,000 comes back. You're earning the same 4 to 5% on your 100, but your actual cash on cash is much higher now because, again, if you take just the remaining $18,000 balance into this cash flow, it's significantly higher. And so our goal is to do that for a few years, cash out one more time, and that's going to give us the remaining principal balance. So by year 4, you'll have all of your original 100K back, and you're really just now in it for cash flow. And we will eventually sell and pull out some more capital, but just these activities produces a 1.4 equity multiple, which is very conservative considering the fact that you're earning cash flow all along the way. And our goal overall, again, is a blended cash flow about 26% annualized. Cash on cash, 4%, it's going to be closer to 5. You can see that here. And really the IRR is what you need to look for. Is the IRR is a 17, strong IRR. And I can explain this to anyone one-on-one if you'd like. The other big piece, again, is you're really seeing infinite returns here. Once all of your principal is back, this is infinite equity, right? You can stay in the deal. We do reserve the right to buy you out if we achieve a 22% IRR. And so, I'm sorry, 24% IRR. And that's significantly above that. So if we do have that, hit that goal, we do reserve the right to do that. Doesn't mean we will, but you will earn strong cash flow and a strong return on your investment. Okay, why Casa Grande? I kind of talked about it a little bit before. This is the current downtown. This is a car show that they do annually. You can see it looks very dated. It's been, it looks like almost a drive back in time. And that's actually a good thing because they're trying to preserve a lot of the history. They brought in and built out a neon sign park. And they took old neon signs along Route 66 and brought them into this space. This is just across from the courtyard from our project. And this is the main drag, Florence Avenue. And if you see this blue sign, that's Food City. It's a grocery store. It's immediately next door to our building. So our building is right here in the middle, right on this main drag. And that's going to be the corner restaurant with the cocktail bar on the corner. So lots of activity. I think they get 20,000 people that come in just for this car show. And they do that twice a year. Plus there's some other events called Main Street. So lots of really good activities. So remember this current sign that's in place right now. Again, looks a little dated. There is a lot of homage to the Native Americans and some of the design and why it's called Casa Grande, which is big house. Again, in homage to the big house, that's a Native American structure that's in Casa Grande. So this is the modern Casa Grande. So this signage is already in the works. There's a plan called the 2030 General Plan. A few $100 million are being spent to upgrade Florence Boulevard, the roads, the bike lanes, and really improve the downtown area. So it's on the forefront of revitalization. So our timing is actually perfect. And even though we got started, nearly 2 years ago, these things are now actually happening. So we get to see them come out and then not just be a thought or a vision at some point. It's actually happening now. This is a great thing to see. Other things that they're doing to really improve the exterior and experience for all the folks. So you see some sidewalk improvements, bicycle lanes, improved or widening of streets, and again, a lot of exterior improvements. So there is funding available for exterior improvements. We have looking for how we tap into that at the moment, but really they're using some funds currently available from the county and from the state to make some of these architectural improvements all along the interior courtyards of the downtown area. So exciting things in the play. Zooming out a little bit, why Casa Grande, why Pinal County? If you look at the location, it's ideally located, between I-10 and I-8, right off of I-10, very close to international borders and the port of entry. So lots of access logistically. The other side is the demographic and what's happening. So daytime population, 94,000 people come in. So current active population is about 66,000. So 30,000 people come into town on a daily basis. Average median income is very high, 84,000. You look across Arizona, I think we're in the mid 60s, 84,000 in Casa Grande. It is skewed because we do have now a lot more tech positions and higher end manufacturing jobs that didn't actually exist just a few years ago. This is a national report from the US Census. You can see the top cities across the country. Multiple cities in Arizona, Queen Creek, Casa Grande, Maricopa. These three are in Pinal County, which is the second largest county in Arizona. Maricopa County being number one, which is where Phoenix Metro is, but this is right there, and some massive growth going on in the city. Why is there all this growth? Jobs, jobs, jobs. So lots of positions, lots of projects coming in play. Lucid Motors, but these are all current and new employers that are already in the works. If you look at this map here, all these colored spaces are new projects, new developments in the works, a mix of industrial, retail, multifamily, lots of positive means, which just means lots of jobs in the works. So really exciting to see some of these things come into play. These are some of the more suppliers that are coming in to help support the chip plant in North Phoenix. All right, let's get into sources and uses. So really digging in and diving into the project itself. So on the left side here, you're going to see our sources. So we have a construction loan in the works. It's actually in loan committee today, 3.9 million in change. The general partnership team has already contributed 384,000. We have used those capital expenditures. Use that capital for capital expenditures and improvements. We've raised about another 300,000 of LP equity, so we have another $1 million to go. Total equity use and total sources 5.6 million. You can see the breakdown here, and then the uses. Where is it going? Some of it went to the purchase of the building, the hard costs, which is all the improvements we're making. Soft costs are designs, permits, etc. Carrying and interest costs are here, so 5.5 million. Our development fee is listed, and we do need to make sure we disclaim that to you. $157,000, a very low development fee, but that is how we get paid. So that's the total source of uses, $5.6 million. A little bit of more granular information, breakdown by leases. You can see here we're averaging really kind of in the high 29s to 30 range, right there in the marketplace for Gen 1, Gen 2 space. We have a Generation 4, right, really 1950s, 60s building, but we're putting in all new mechanical, all new electrical, a new roof system. And so it's going to be a brand new building inside of an old shell. It is a triple net project. So that means retail triple net is something very exciting for a landlord. That means our expenses are very minimal. So triple net means your taxes, insurance, your maintenance, and your common area expenses are all divvied up amongst all the tenants, which means as a landlord, our major expense is really only going to be taxes and insurance, but most of it gets paid by the tenant and some general maintenance. So we don't incur as much of the expenses as possible. And so our overall revenue is going to be 602,000. I apologize if that's a little blurry. And then our total net income ends up being 449. So a very low expense ratio overall. So take the 449 conservative NOI. I reduced this down just a little bit more when I did these calculations. So you could see using a 7 cap, which the market's right today is right around 5.96%. Just in year 2, we're immediately already above what we're going to spend on the project. And our goal is to hold the asset for 5 to 7 years. And so on the low end, it's at 6.9. On the high end, it's at 8 million. So we're targeting somewhere in the middle of that, really sooner than later, because as soon as we hit this point, we can extract that capital that I discussed earlier on. All right, our team, very quickly, these are the GPs. This is our core team for this project. Michael, myself, and our team here is Nimble Capital Group. And in this particular project, we have Caleb, Amy, and Mark, amazing people, are partners on our other projects as well. And so, a lot of experience in multifamily, a lot of experience in property management, redevelopment experience. And so we're really blessed to have a great team on our team here. And here's some of our other projects that we own. Again, you'll see predominantly multifamily. The retail is new for us. However, bringing in our broker and our general contractor, that's the expertise that the team needed. And so we have those core team members, even though they're not directly on the partnership team, they guide and consult on a regular basis. And so they get paid very well to be those consultants for us. All right, that's really an overall footprint of where we are. This is the states we're in, really in 4 states, really try to focus on being experts in our marketplace. And again, I'll wrap this up with, this is the investment criteria. You can use cash, self-directed IRAs, solo SEPs, Roth IRAs are all, as long as they're self-directed, you're good. Again, this is a 506B offering, which means we must have a pre-existing relationship with you. You can be accredited. You can also be non-accredited or sophisticated, but we do need to touch base and make sure that we have a pre-existing relationship. So thank you, everybody. If you have any questions, please don't hesitate to reach out. Have a great day.